Good morning. Welcome to Master Trader. You can learn to use simple market and stock analysis to make money in trading. I'm Greg Capper. Today I'm going to show you what's going on in the broader markets and I'm going to take a look at a few gapping stocks. So markets are up here pre-market, and that should be no surprise. Many are probably expecting further downside from yesterday's red bar, and that's certainly one of the possibilities that could have happened. But realize that the immediate trend here is up. And one of the concepts that we teach students in Master Trader Technical Strategies is that when the power is with a trend, and in this case it was to the upside, many times red bars are going to be ignored, or they're not going to follow through in a big way. So when you see a red candle within an uptrend, don't get overly bearish when that happens. Now, that aside, we do realize that this came up into an area of resistance, and this is a normal reaction to coming up into an area of resistance after a reversal day and 2 days up into it. Once it couldn't clear that high yesterday, and then began to hang around up there. You can see it over here. Began to hang around up there. Buyers got a little nervous and they began to sell. And then prices came down to an area of support where buyers then felt safe to begin to add to positions again or initiate new ones. So that process has now begun here. And the question is, can we get back up to the highs? Well, of course, prices can, but the way prices came down was a little steep. It, tells us that some fear came into the market here, and whether this is the futures or any stock that you would be trading, we interpret it in exactly the same way. So what is likely here, unless there's some news to really motivate things, could be a choppy day in the markets. And I think that is very likely, unless for some reason things begin to blast off to the upside here or break below this low with some significance or power. So you've got a trading range here intraday, which is yesterday's range, that high to low there. Here's the green bar, right? Here's the green bar, the up day, the red bar, right down here, and now where prices are trading right in this moment. So once prices came down, and let me give you a Master Trader Technical Strategies concept of how to interpret price action without indicators. Those of you that are using indicators and looking for your bearish divergences with your momentum indicators, it's not necessary. When you see prices coming down, let me just get a drawing tool, or up, in this case down, momentum picked up after breaking below a low. Odds are it's going lower to at least here. Then you start to watch the turns. So here was the turn. Here was the turn. No follow through. Push down again. But look at the distance here. It's a little less than it was. Right? So momentum slowed down a bit in an area of support. And then here was the next drop and the turn. Virtually no distance between the lows. So if you are using some type of an indicator, what you would have seen, right, is it moves down, and then as it comes down here, it's making a higher low. And this is where all the indicator people that are suggesting that you use them, or actually telling you should use them, oh, look at the divergence here when it made a new low. This is your buy setup. Now, what you look for, is it in an area of support? Is momentum slowing? See the way I drew that? Momentum is slowing. Consolidation. You want to trade against the trend. That is a point where you can do it. This is your major support area, which is just clearing now. So it's breaking the downtrend, which means if you use that rule, you don't need to use diagonal trend lines. So there's my lesson for the day on technical analysis and how to interpret price action without indicators. You can do it with anything. We have a lot of stocks gapping up. Here's one gapping down. that has been a favorite in the past on the short side. I suspect there's some news. It's trading down around $17. There is a prior low here. The 200 is here, but this looks like it could be what we call short bait, meaning it's likely to go lower. You had a consolidation, and now it's gapped down, and there are plenty of others that are gapping up and gapping down. But keep in mind, the markets look like they might be a bit choppy, but prices of individual stocks can trade on their own page, as we say. Good luck trading. We'll talk again soon.